I read the news so that you don't have to. Wall Street is sitting on a $768 billion problem. As you can see, the headline says, Wall Street underestimates private capital problem, says top credit hedge fund. So here's what's going on. A top credit hedge fund, Davidson Kempner, just came out and basically said that a huge chunk of private equity deals are already stressed or distressed, not in 5 years, right now. And this matters because private equity and private credit have been one of the biggest money machines on Wall Street for the last decade. So let me just break this down. Private equity firms buy companies using borrowed money. That's called a leverage buyout. If you don't know what that is, go and ask a Manchester United fan. But think of it like this. Very simply, you buy a house, you have a massive mortgage. You're betting that the rent will cover the mortgage, cover the loan, and that the value of the house will go up. Now imagine this. Interest rates suddenly double, your rental income goes down, it doesn't grow, and the house value, plop, drops. So that's exactly what's happening to a lot of these companies. There are obviously other things that are making this situation worse. The first being too much debt. A lot of these deals were done when money was cheap. It was basically free, and now rates are higher and the math just doesn't work anymore. Weaker cash flows are also a problem. Many of these companies, especially tech and software deals done between 2019 and 2022, aren't generating enough cash to service their debt. Thirdly, this is the wild bit. Instead of paying interest in cash, companies are just adding more debt on top of their debt. It's called payment in kind. They're not solving the problem, they're just kicking it further down the road. So why should you care? Thank you for asking. Well, this isn't just hedge funds playing games, it's pension funds, it's insurance companies, it's even retail investors. They've all poured money into these so-called safe, income-generating private credit funds. And now, people are trying to pull the money out. So if this unwinds properly, here's what happens. Falling valuations, forced asset sales, a wave of defaults, and funds restricting withdrawals. We've already seen this starting to happen. So the open secret is that Wall Street isn't actually worried about dealing with a future crisis. They are quietly dealing with one that's already started.